The main market in the past trading session didn't do too well. There were really negative results right across the board, except of course for beverages, tobacco, household personal, and a bit of healthcare as well as utilities. But the tech stocks got whacked around, especially Nvidia, down over 4%. Banks, insurance companies, they were also hit, as well as consumer cyclical and communication services. In this video, we'll check out the structural levels that you need to know on especially the crypto market. Also, we'll look through the macro. Let's run the numbers. Welcome back to the Daily Show, everyone. I hope you had a fantastic weekend. We're seeing at the current time Russia's market and China's market are going for it, whereas the US markets such as the Russell 2000, the Dow, the S&P and the Nasdaq are under pressure. We often see this cycle play out. The Russian market and the Chinese market come up while the US markets come down. Also, we can see Australia's market has cut under. One thing to just bear in mind, if we lose our trend, it will come down to a natural point of consolidation and then make a decision up or down. We'll keep our eyes on things. And we can also see that Germany's market has been going nuts. Well done, Germany. Something that I talked about last week. When retail look at moving averages, they make all their decisions based on that. And I said if we get above 97,913, retail will go all in and more. Unfortunately, there was a lot of structural overhead resistance. And I pointed this out a couple of days ago, well, on Thursday, before we had this big spike down. So the day before we had this, I was talking about the fact that we had overhead structural resistance. Everybody would come into the market and say, woohoo, this thing is going to $100 billion, $1 trillion Bitcoin. And unfortunately, it's just going from structural level to structural level. This makes it wildly important to know where the structure is. Now, what happened on Friday? Friday, we saw that Bitcoin came up and challenged this structure but had a structural rejection. It made its way down. Now, what is retail thinking now? I'm under all of these moving averages. It looks like I'm coming down to here and then just a fresh air gap and I'm going to fall down. Again, wrong thinking. Retail thinking is almost invariably incorrect, unfortunately. What we can see here at the current time, there's a lot of structural support down in this area. That's why I'm going to spend a little bit of time going through the structure in a fine depth so that you can understand what's moving inside the markets and where the ceilings are and where the floors are. This is wildly important. In fact, if you don't know it, you're just gambling. Before we get into that, I'll just talk about upper bank and lower bank. This blue line is Bitcoin's gravitational pull. One thing that you should be aware of, Bitcoin cannot escape the US stock market's gravity. So if the gravity of the stock market is downward, expect the gravity of the crypto market to follow. And we've seen globally there is some weakness in the US major indices. But there, of course, are always opportunities. When we look across the weekend, on Friday's session, the markets came down. On Saturday, they recovered somewhat. On Sunday, they came down slightly. Upper bank, Ethereum and BNB. Lower bank, Pepe, Solana and Floki. To understand where structural levels are, we mark up the charts with level 1 and level 2 standard certification. I've done this already inside the service and it saves you a tremendous amount of time. All of these charts are marked up with their structural levels. We're going to have a look into a window of this structure. We need to know where things are heading. The vast majority of times on the weekend, the price tends to be a little bit positive on Saturday, a little bit negative on Sunday, but it does tend to just drift. We see this weekend after weekend. The two levels that we needed to keep our eye on in terms of Bitcoin structure were 96,493 and 94,574. And what did we see? When we were at the last video, we've just literally basically flatlined. But there's some important information in here. we managed to get above this structural overhead resistance at 96,493, but we couldn't sustain any upward momentum. In fact, it was all negative. And when we look across the major market indices, we're really not surprised about this too much. But remember, when something comes down hard, it does tend to bounce. And this type of moving in a wave fashion is something that you need to understand. In terms of the total crypto market cap, we saw it coming up into structural overhead resistance at that 3.16. This is exactly why Bitcoin had trouble breaking out. You can see the alts were doing quite well. They were coming up, and this of course includes Bitcoin as well, but it couldn't surpass this 3.16. You must look at total crypto market cap and Bitcoin together in order to understand the momentum on the alts. And we've seen it's backed off from there. Total crypto market cap is currently 3.12 trillion. And Bitcoin is currently 95,768. If we get negative momentum on Bitcoin, the good thing to remember is there's a lot of underpinning structural support between 93,432 and 94,574. Going back to total, we understand there's not much in the way of structural support in here until that $3.05 trillion level. So it's going to come down to Bitcoin. Keep your eyes on those Bitcoin levels. Across the weekend, XRP came up, but we know total crypto market cap and Bitcoin just couldn't make it. So that meant XRP's price was suppressed below that 2615 level of structural overhead resistance. You can also see that XRP had a structural support level at 255.6. If we're looking negative and Bitcoin and total crypto market cap come down, we could anticipate XRP coming into this 241.99 area. It's really important that you just don't have one-sided understanding as where the market could go. Price is always moving in a wave. It's coming down, it's going up, it's coming down, it's going up. So having this wave-like function in your thinking is really important. If XRP overcomes this 255.6 level of structural resistance, it can make its way up to 2615 and 2646. You literally just have to observe price in its natural environment. All the charts are intercorrelated and interconnected. Litecoin across the weekend was a little bit weak. Now, why was it weak when the other ones were actually quite strong? They went in the other direction. Well, Litecoin is just following Bitcoin's gravitational pull. It's over-reflecting the negative side action and under-reflecting the positive side action, but it is moving in directional correlation. But Litecoin just went for it recently, so that's why it retraced on Saturday. And on Sunday, it came up when the other alts were coming down. Understanding how oversold conditions and overbought conditions play in is a real advantage to you. And when we think of Litecoin levels, getting above this 127.90, we are likely to come up to the 136.70. If we fall below, there's a lot of structural support, so we wouldn't anticipate too much below the 120.60 level. It could overshoot and then just spring back into that area. Litecoin could be a really interesting chart to keep your eyes on. Solana is getting really variable. Across the weekend, we saw that upward price momentum. We know the total crypto market cap structural resistance was up here. And what happened to Solana? Of course, it comes down. That's the entire crypto market. And when we came down to the 170, we interacted really wildly. But there is negative price momentum across the crypto market currently. The next structural support is at 165.40 for Solana. There are a degree of structural support levels below that 165.40, just to bear in mind. Price is always moving in a wave. It's always up and down, up and down, up and down. We can make a lot of money from these waves, but you must know where the structure is, because as price comes back, it will interact with structure. If it can't get above, it's negatively structurally attracted to the structural support level below. But if it can get above and stay above, for example, we got above here and then we couldn't stay above. But if we can stay above, and of course this is going to happen, if we can get above that 170, we're going into a positive CTKS gap, but it must be reflected and confirmed by total crypto market cap and Bitcoin. Solana's chart doesn't move Solana. That sounds pretty strange, I know, but it's absolutely correct. Institutional players understand that no alt can escape Bitcoin's gravity. Also, there's intercorrelation and interconnection between all of the charts, and not only the crypto charts, but especially the stock market charts, commodities, and the Forex pairs. We've seen ADA do quite an interesting volatility. It came up during Saturday, it came down during Sunday, but there was some really interesting price action within ADA. The things to be aware of, and why did it come down like this? ADA's a very strong project. Solana has been in the doldrums of late. One thing to just bear in mind, ADA's resistance level at 77.21, if we get above there, that's opening up the 79.37 mark, but there's a lot of overhead structural resistance there. That's the bullish case. The bearish case is that we lose the 76.21 and head down to the 73.99. Inside the comments, what will dictate if we go bullish or we go bearish on ADA? It's a really good question to just ponder and ask yourselves. I really look forward to your comments. Of course, structure works on all marked up charts. Any chart that has a candlestick pattern can have CTKS structure on it. When we look into gold, which is currently 29.34, we can see there's a lot of structure at 29.39 and structure at the 29.30 mark. If we can get above 29.39, it's a pretty fast shot up to 29.59. If we lose the 29.30, we have really light structural support at the 29.21 level, and then far more structural support at the 29.03. Currently, gold has not made up its mind if it's in an uptrend and just retracing to confirm and then attack to the upside, or if it's going to break down and revisit that 29.03. It was really interesting. Quite a few days ago, everybody was saying gold to the moon, and definitely it was pumping like hell. But the issue is structure always matters. The major problem with retail thinking is retail has no idea where the structure is. They'll just throw on a moving average and think that's somehow representative of all of price action and history. It is not. It's just an average of price. A moving average with a period of 1 is the price. Moving averages are quite helpful to understand trends and just to abstract where those trends might be going, but they have very limited institutional use. They're for retail, and retail, unfortunately, are like the gamblers that tend to pile into casinos. They typically leave with their pockets empty. One of the things to just bear in mind, the DXY is also quite important to look at. It has an overhead structural resistance at 106.7147. Structural support at 106.5109. If it starts to get above that 71.47, heading into the 107.1708 level is on the cards. If we get a big spike up in the DXY, that makes everything relatively more expensive. And remember, this is not the weekend, this is Friday and this is Thursday, because the DXY goes to sleep. Obviously, there's no international trade on the weekend. It's important that you bear in mind one thing that always happens. We have normalized positive price paths and normalized negative, and also consolidation patterns. And I talk about this inside the service. When we look at something like silver, silver is coming up to this structural resistance. Remember what happened to Bitcoin. Bitcoin shot out above all those moving averages and got its head whacked on overhead structural resistance. And there was quite a bit of it there. And then it backed off, and backed off wildly. One thing that we look for in these price paths, and this price path was drawn up at the start of the month, you can see how it's reflecting where the price is actually going at the current time. When you have a big move up in price, people just naturally expect continuity. At one stage, this was a big green candle and people would have been going all in and more. Unfortunately, it turned red again because the price is always moving in a wave. Always, always, always. Think in terms of waves. You're ahead of 95% of people inside markets. And our community is really, really different. We focus on an institution of one mindset. We are not retail. Retail gets slaughtered inside financial markets. Let's just have a really quick look at the liquidation heat map on Bitcoin. We can see around that 94.5 up to the nearly 97 mark on the 12-hour. 24-hour, 94.5, 97.5. It gives you some idea where the shorts and the longs are hanging out. 94.5, okay, say 97.5, just a little bit lower than that. Now, let's have a look. 94.5. So keep your eye on the 94.5 level because there's a lot of liquidity. And when it comes to traders and investors, they seek, especially institutional ones, they seek to just grab this liquidity. So around 93. So say 94.5 to the 93 level. Let's just quickly go back and look at Bitcoin. There's also some liquidity hanging around in the 100 area. Now, we've seen a bit of negative price momentum enter the major indices globally. Just be aware that everybody is thinking down. The best thing that they can do is to come up and grab all this liquidity. Everybody thinks that they can go long, all the longs support price underneath, and then they crunch down through it. This is why you must think in a wave. So just by way of confirmation, around that 94.5, there's quite a degree of liquidity, as well as down around the 93 level. So if the negative downside liquidity gets attracted, we could see something like this. Okay, so just be aware of that. But if the upside liquidity gets tapped, it could make its way all the way to 100. But how do you deal and create certainty around this? You look at the price right now, 95,795. It's not going to 100 if it can't get through 96.493. And it's not going lower if it can't get through this 94,574. Keep the immediate structural levels in your mind. Also, just keep in mind, total crypto market cap structure, there's a negative CTKS gap. Now, this favors more downside, negative momentum, especially if we can't hold on at this particular point. Do not wed yourself to it can only go down and can't come up. That is not correct thinking. And also don't wed yourself to it can only go up and it can't come down. That is also incorrect thinking. A lot of people just subscribe to the only up or only down method of thinking. Of course, this is nuts, pure nuts, because you just see on price action, it's always going up and down, up and down. It's never just going all up or all down. It just doesn't work that way. As the markets are always moving up and down, it's very important that you keep your mindset very, very positive. The universe does want you to succeed, but you require knowledge to do that. If you're lazy, you don't invest in your knowledge, guess what? You're going to lose money. That's as simple as it gets. That's kind of a harsh reality, but it's true, and everybody knows the truth when they hear it. Always remain dedicated and committed. Just focus on your learning. If you find that you're making a loss inside the market is just saying, hey, look, don't do that. The learning comes in when you say, do what? And sometimes you'll be in a position where you look at the market hands you a loss and you say, I don't know what the hell happened. What did I miss? Often when that happens, you didn't perhaps notice that VIX was basing. Ken, what's the VIX got to do with what happens to Solana? Answer, everything. If you know what I mean, please leave a I know what you're talking about quote inside the comments. Always remember too that opportunities in life reset daily. If you've gone through a series of big losses, don't think that you can make them all back in one trade. Typically what happens when the markets come down, they will spend some time basing. They may flip up only to flip down. because it takes a bit of time for things to turn around. Please keep this in mind. That's why we just take it on the chin and say we go slow to go fast. Starting small and scaling is a very, very good idea, and buying on red and selling on green is the way to go. Retail will want 1,000% plus returns on a single trade, never understanding the role of compounding. There is so much to learn. The first thing that you realistically need to do, you must understand where the structure is. If you've made it up to here, please pop a comment in structure first and I'll know that you made it. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.